Hello, ladies and gentlemen. It's Modern Investing on Pod TV. My name is Sasha Starr, and today guest we have Dr. Milan Sombarak. Welcome to the show, Milan. Okay, we're waiting for Milan. Okay, now we can see Milan. Maybe we will hear him as well. Milan, how are you doing?
Only decline is possible for me because it couldn't be any better, and I hope that you can say the same.
Okay. Also, we have Jim Ead from Ead Foundation. Welcome to the show, Jim.
Thank you, Sasha, and happy belated birthday.
Thank you so much. It was a wonderful day yesterday. Had tons of congratulations from all over the world, and very happy to be here. It's another year, but okay.
Sasha, remember this, Sasha. The more birthdays you have, the longer you live.
Yeah, it's hard to disagree. Absolutely.
Keep on having them in good health.
Exactly. And, you should celebrate your birthday while you're still around here, because after that, it will be more difficult. So market today is horrible.
Yes.
It's Wednesday and it's horrible. It's about to give up all gains that it had in the last 2 days. Horrible.
All red.
So was it Sucker's rally in the last 2 days, Jim? What do you think?
Well, I think there's a lot of uncertainty in the market about the Trump tariffs. Are they on? They off? The kind of bullying that's going on and trying to get countries to do what he wants, and the alienation of the Europeans, for example. The leaked memo that was inadvertently
Incredible.
It included an editor of a paper of the Atlantic, in their negotiations about the attack that they were going to do on the Houthis. And so it's these types of things, and the negativity that they present to the rest of the world. They're creating the rest of the world is starting to hate the United States for its swagger, and there is no president that has taken the bully pulpit so seriously as Trump. And I think it's going to have a severe effect on the markets, but I do think that they will rebound. I don't think that this is a sign of a significant decline or recession.
Yeah, a recession is expected much later in the year. Actually, there are a lot of talks about recession somewhere, who knows, in the fall. But again, it's all guess, and we don't know what maybe market will go before the fall to such heights that the recession will not be that painful at all. If it's a recession, nobody knows. But you're right, in some sense. Trump is defeating himself by entering tariffs or threats of tariffs, and then going backward and say, no, we are going to impose tariffs, but not all tariffs, and against not all countries, but some countries. And he's playing, some countries, let's start with Canada, for example, they're not scared about Trump's tariff at all. What they're saying is, well, okay, we have our own tariffs. And the premier of Ontario, Ford, he imposed very painful tariffs, including electricity, which feeds 3 states, Minnesota, Illinois, and New York. And then Trump walked backwards and he said, okay, we'll cancel some of the sanctions. And so they asked Ford why he's not canceling his actions. And prior to that, he was told that, okay, US will impose the tariffs against all world. So you're not alone. Everybody there will be tariffs, and then we'll start moving backward. And he asked, so what your implementation, like against whom you're going to rule backward and against whom not? And the answer was, those who are nice to us, we will scale them down and maybe even cancel altogether. So when he was asked how come he is not scaling down Ontario actions, electricity and others, he said, you are not nice enough to us. That's why. That's complete mirror reaction to what just he was told by Americans.
Well, and he seems to be willing to cancel sanctions against Russia as well.
Russia. For what? It's completely different. It's not economic sanctions. It was war sanctions. I'll tell you, Trump, see what he's doing with Russia. It was not part of his election campaign at all. He was not elected on the platform that he will bring Russia back to G7, that he will start to be a great friend of Russia or so on. And I think average American, they don't buy it and don't understand what's going on. And the market doing exactly the same thing. What's in it for the American economy? All this attention, energy, money spent on this completely futile, the endeavor to have a peace between Russia and Ukraine. This, in 3+ years, well over 1 million of people on both sides were killed, maimed. It's just too much blood on the streets. It has to resolve. It's like First and Second World War by its intensity, the length that it takes. There has to be ultimate winner, and that will create a peace for many, many years to come. But there has to be an ultimate winner. If not, the war will start in a few months again. So let it ride. Let them figure out who is going to be a winner. It could be Russia. It could be Ukraine. Even the Ratcliffe said that we are all underestimating the strength of Ukraine and their ability to fight. And that's where our mistake is. So just let it ride, see what's happened, and then once one of the sides will feel that they cannot fight anymore, okay, they will come and create. But when both sides want to fight, it's obvious. Russia wants to continue to fight for a very simple reason. If it's a peace, Putin is gone, because he will not be able to justify loss of 900,000 Russian boys. He will not be able to do it. Now, if Ukraine, with all the heroic fights, if it will not be able to continue, then there will be a peace. They will lose in spite of their heroic fight. They will lose. It sometimes happened in history. Read Victor Hanson Davis. Read about, he wrote a great book by the name, I think, sometimes something happened that never was thought out about. And he brings examples from the antiquity to Middle Ages when one of the sides would lose and disappear. It's something unthinkable, and it's happened from time to time.
Give us the name of the book again, please, Sasha.
I have to find out exact name. It's something, one word. I think it's unthinkable, or Just to look at the list of his books. It's definitely there.
Okay, now listen. The answer is very simple to where the market is going. Nobody would buy a security with the price earnings ratio that the market has today. The price earning ratio of the market today is about 25, unheard of. The historical average is much closer to 16 or 17. The market has nowhere to go but down. Now, Apple has been named by Fortune magazine as the best run company out there. And Apple has enough cash. In a falling market, cash is king. Apple has enough cash to buy Coca-Cola and Disney World completely and fully. Warren Buffett similarly has a lot of cash. And so people who are thinking long-term know that the market will have to return to its historical price earnings ratio, which is much lower than it is today. So, that's where the market is going. Unquestionably, Goldman Sachs, I mentioned this before, and the Bank of America are predicting stock market returns of 0% to 1% for a decade in order for it to equal what it traditionally has been. So there it is.
It's a very uplifting statement, but I did read it, Milan. I saw your analysis, and unfortunately, I do agree with it when I'm looking at the PE ratios being as high as they are. I have been buying stocks, though, but ones with much lower PE ratios like Ford Motor. And I did really well in the Ford Motor. Also Dow Chemical, which I just got out of because I made some money and out the door I went because I put, limit sales on them all the time so that if they hit a certain target, I can say goodbye. And I ended up doing actually quite a bit of acquisitions this week on usually stocks which I looked at were undervalued, low PE ratios, high dividends. Fortunately, I did too many acquisitions. I don't know what they are.
On its way down, which is a certainty, on its way down, the market will fluctuate, and there will be opportunities for people like you to buy low and sell high. It goes down.
I bought Sinclair, which is Dino. It trades, and then it went down, and I actually bought some more because the thing is, it's got a good dividend, good PE ratios, solid company. And so the thing is, if I get something that's solid, I'm willing to ride out, and it pays a dividend, 5% or better. I'm willing to ride it. So
that makes sense, Nick. That makes sense. But I have to take issue with the idea that it's going to revert to the historical averages. The Nasdaq was total of 5,000 in the 1990s, and it's now pushing closer to 20,000. It's not going to go back to 5,000. And one of the things that has changed, and this is modern investing, the modern price earnings ratio of tech companies is misleading by historical standards because the future revenue is based on things that aren't evident now. But if the companies are good, they're sound, they've got revenue now, and the future revenue is predicted to be much greater, then that's built into the stock market price. So you'll look at the price earnings ratio and you say, oh, that's way out of line. But it's not, assuming that the growth continues. Now, the idea that the stock market will correct is of course correct, but in the sense that they've been saying it for 5 years. I've been hearing that the recession is this fall for 5 years now. So they're going to be right one of these years.
That's true.
But it's not on the immediate horizon. And so I don't agree with doing my tech analysis based on price earnings from the past or for companies, their historical presence. If you're going back to the 1990s, you're not a modern investor. Sorry.
I'd like to add something to it. So, in effect, Nasdaq is becoming somewhat similar to betting on a futures market, because when you are buying high-tech stocks with high earnings, you are betting that they will be able to sustain and grow earnings even higher. So, therefore, whether the historical valuation of 25, 30, even 35 times earnings, you're talking about this year earnings, but next year earnings could far supersede what's happening this year.
And that's been the track record of these companies that we've been talking about. They keep exceeding expectations. They
Yeah,
keep
but Milan is saying
exceeding-
it's going to regress to the mean. It doesn't necessarily mean it's going to hit the mean, but it will regress to the mean, which generally that's probably what will happen. It will regress to the mean. So if you're sitting on 30 and the average is 17, it may regress down to 20, 25, maybe
over
7.
what time
Maybe.
period, Nick?
Well, that is the key to investing. What you just said, Jim, the key to investing is what time period.
Right.
Because when I was about to pull the trigger on GE and it was trading like 20 or 30 a share, and I didn't do it, now it's 197. But it would take me 3 years to get there. I'm still haven't pulled the trigger on WBA, which is Walgreens Boots Alliance. There's money to be made in Walgreens Boots. It's printing money, and I've done that before because there's a valid offer for $11.45 a share, and it's right now trading at $11.21. The problem is you've got a holding period between now and fourth quarter, so you just lost all the opportunity cost by tying up your money for several months trying to make pennies on the trade. But if you don't know what to do with your money, then that's kind of like an almost sure bet. It's just buy Walgreens Boots Alliance, hold it, wait, and then when they get cashed out by the private equity firm, you take your money and you run. So there's some dumb money to be made out there. It's like Sasha doing these covered calls on NVIDIA for a long time. He's just printing money, as long as that ride that horse until it drops. My problem as investing in NVIDIA and Tesla is their P/E ratios are beyond the charts that I feel comfortable with. And the time period I may have to hold my rear as the stock rolls down and maybe rolls back up again and maybe not. And so the thing is, you're betting on the future. So I think everybody has to do their own evaluation of the corporation and their own risk tolerance to make decisions as to what they want to do. Some people,
Tesla's not the kind of stock that you would buy now because of the Elon Musk factor. But
because that creates risk, and I think that, Wall Street and I think who's that Graham who wrote the book Intelligent Investor. I think there's still intelligent investors out there. And when you interject risk into a situation, then you devalue it, because you want certainty. You don't want risk. You don't want volatility. So when you see the leader of the company be volatile, most intelligent investors will stay away from it. So I stay away from Tesla.
Yeah.
The best definition of risk that I've ever heard is Warren Buffett's, which is risk is not knowing what you're doing. Well,
yeah, but like I said, if you can always have the advantage of time. If you're sitting there saying I'm going to wait, but there are some stocks you can wait for 5 years and they're still dogs.
Management guru Peter Drucker emphasizes the importance of looking who is in the management, because the management of a company is what will do. So how do you find out? How do you find out?
Not
how
easy.
the managers are?
You are spot on, Milan. I mean, the thing is, the management makes all the difference. And when I read my MBA program, management, it's just something you have to do to pass a test. In reality, when you're purchasing any company, probably the most key factor is who's running the bloody show.
So Tesla has superior management because it's headed by the richest man in the world.
Oh, come on, please.
Yeah, but now he only cares about shooting rockets at this.
No. The thing is, as Elon Musk knows, he's rich only on paper. It is people who valued his stock beyond anybody's dream that makes his net worth. If he had to cash out, he would not get close to what you're saying.
Oh, his board gave him millions of billions of dollars, and so he's doing fine, Nick, and he's also in position now so that whatever bills get passed, he's going to be on the inside.
I agree. He does have some inside.
Rich for the.
He does have some inside cards. That I will agree with, Jim. Yeah. But the thing is, his net worth is basically inflated relative to reality, and that's because, as Bill Gates said, I don't have that money. That's the value of my stock, as the investors believe that it's worth. And so if you get somebody to believe it's worth, then fine. But you're right. He did make a great play because he basically has all the inside scoop of what goes on Washington, and that's where he made his money to begin with.
Yeah.
He
Yeah.
sucked out 20 to 30 billion from Washington, D.C., from the Democrats of all people.
Well,
By the way, if Bill Gates wouldn't go
he doesn't care
through
who's in charge as long as he
Yeah,
has
as long as it's him. You're right. He's sure who's in charge as long as he owns them. No, I mean,
equal opportunity buyer.
yeah, I understand Elon. I don't care as long as I own it, So, yeah. So, but that would be the reason to bet on Tesla. But I just don't want to take the risk.
No, his interest has moved on beyond that, anyways.
Yeah.
So I think SpaceX is his thing now, and that's where he's going to make another good.
Yeah, but he has to get the government to agree to buy his contract,
and they will.
Wait, he is the government.
Yes.
So it's quite possible.
But NVIDIA, I think, is still the thing. I think about the price earnings ratio. You have to bet on what you think that the future is going to be, and I think that the AI phenomena is still on the cusp, and we're still growing, and so the revenues will continue to grow in that sector. And as long as you believe that, stick to your guns. But if you don't believe that, or if you're worried about it, get out. It's very simple.
And there are two good stocks in the AI that run by chess players for the chess people who are listening. One is Palantir, and Palantir, of course, is Peter Thiel's company. And Peter Thiel's a chess master. He lives next door to you, Jim. You played him,
Yeah,
I'm sure.
Peter.
And he's also an attorney. And the guy's a really sharp guy, first investor in Facebook. If you want to bet on the management, he's probably a good bet. The other one is Pegasystems. That's the one I own. It's actually run by Alan Trefler, former World Open chess champion, master, and multi-billionaire because he founded Pegasystems, and he's moved into the AI sector. So there's two great chess players that are doing it. I went with Pega. I should have done both and gone with Palantir and Pega. I just went with Pega because I know Alan Trefler. I didn't go with Palantir because I don't know Peter Thiel, but I think both of them are probably good plays for AI because chess players are wired toward that. So they'd probably do well in both those. The rest of the company field, I don't know that much about in terms of whether they're going to succeed or not. But I think both of them are good managers. They both were. One was part of the PayPal mafia. That was Peter Thiel, and the other one, he just struck out on his own in Dartmouth and Massachusetts.
If we had life to live over again, many of us would have done things differently. Now, James, you have a Tesla. Do you drive a Tesla? And so do I. Are you concerned about vandalism to your car?
At this point, it's. I've talked to other Tesla owners, and it's definitely a concern.
Really? Wow. People vandalize Tesla. Why would they do that?
Well, because there's such an anti-Musk feeling out there.
You Americans are so weird.
No, you think about all the layoffs and all the inhumane activity.
Yeah, but that doesn't mean that the owner of the Tesla had anything to do with it. I mean,
Of course he did.
No, I'm saying the owner of the Tesla being you own a Tesla.
Oh, no, it's not. It's a symbolic protest. That's what most protests are. They're not against me.
Oh, okay.
Yeah, they're against the Tesla, the symbol that represents Musk.
I can't believe they do that.
Well, I think it's human nature, and I think history has shown that people will do this over and over and over again. People will tip over cars if their basketball team loses. So come on.
And if their basketball team wins, they'll tear down the goalpost or something like that. People. One thing you can bet on, they're incredibly stupid. So you just have to put that into your equation. What they're end up doing, and that's one reason. Milan, I know that buying the S&P 500 as a whole is probably a good strategy, and keeping cash reserves and moving in and out and rebalancing. I like your strategy, but I'd rather buy the top 100 of the 500 or the top 25 of the 100. But the real problem is, you're right, you got to work like a dog to find out who they are. And a lot of people are just too lazy; they don't want to do it. I can see.
If you have the time and energy, and you think it's fun to do, then by all means do it. If you don't have the time or energy, and you don't think it's fun to do what Milan suggests.
Yeah, that's what I would totally agree with you, John. In other words, right now I kind of enjoy it because I purchase things every week.
And they're going up, and you're making
more.
Well,
they go up and they go down, But I have limit orders on going down and limit orders going up, so I'm just making spreads.
That's another way to play it, right?
Yeah, it's just another way to play it.
Yeah.
Russia has done well with NVIDIA, but our group, Monday Morning Millionaire, about 300 people, say you should just own the S&P 500 because by owning the S&P 500, you also own NVIDIA.
You own the video. I know.
You
Yeah,
also
and
own, you also own silver. Yeah.
Yeah. Well, that's part of the reason, because I've also I have a professional money manager who works with me, and actually he does his own thing, and I just get the reports. And I assume because he's a professional money manager at Vanguard that they buy NVIDIA because they're one of the biggest holders of it. So I have NVIDIA, I just don't know it. And but as an individual investor, I will not trade in it because it doesn't hit any of my metrics. Neither does Tesla. I'm sorry. Other people, they may make $1 million off it. And I think they did if they bought it 15 years ago. But we're talking about today. And when people, as they say, when it hits the Wall Street Journal, it's too late. It's too late. If you read about the Wall Street Journal, it's a great stock.
That's how I felt. I was touting the stock Marvel MRVL, and no one was talking about it. And it just kept going up, and I was just really proud of it. And then everybody noticed it, and they started talking about it, and it's gone down since.
Right. Yeah. It's when it hits the Wall Street Journal, it can be really good or really bad.
The rule is buy on rumor, sell on news.
I wish I would had this. I followed my own discipline, my own rules. I would have sold. Yeah.
Well, I bought a lot of Micron stock because all the analysts say buy, strong buy, buy, strong buy. It's been a dog so far, and so the thing is, just because the analysts say, but when the analysts say stuff like that, it has a strike price of 140 something, 143, and it actually sits at around 94 right now. Okay. But when they say that, see, they can make the market. This is where the individual investor doesn't understand. The institutional investor can make the market. It doesn't matter what any of us here think. Okay, if they decide it's a strong buy and they move their capital to buy Micron, it's going to go up. There's nothing we can do about it. And so the game is kind of rigged because the institutional investors have so much more money they can plow into one individual stock than any individual investor can. So it's kind of on the ride. So I bought Micron on what I call on the ride because the institutions believe it's going to hit 140. I believe my metric says it's kind of a wonky stock, but I went ahead and bought some anyway based on the fact the institutional guys at some point in time may pull the trigger and send the stock skyrocketing like they did with General Electric. And then you don't have time. By the time it does a run up, it's too late. In other words, you have to be in it. Yeah. You have to be in it before you're.
It's like Milan says, "Don't fight the trend." But
yeah, right. The trend's your friend until it isn't. Yeah. I like your sayings, Milan. The trend is your friend.
The truisms. Milan's truisms. Yes.
I'm looking at certain charts where the downfall of the market was quite vicious in the last 2 months or so. Some stocks went down, like, for example, the trade desk. The trade desk went down from about 150 per share. Probably it was overpriced. It was due to the correction, but what a correction! It went down to $50-some. Yeah. So they had also unfavorable quarterly report. Okay, but even with that, the stock cannot go. It was a good company like that so much. So, my opinion, overreaction. So I bought few shares. It went up after I bought it. On day like today, it's going down. But I think that overall, it will make a little bit from a third of what it lost to a half. I'm not suggesting that it will come back
all the way back.
No, I don't think so. But it could go up to 100 in a matter of few months, maybe. 100, maybe more, maybe 120 or so. We'll see.
This is a past strategy of mine, Sasha, and I believe because it worked. It was just based on my experience. But some companies that got bad press or got beaten down beyond their book value, that's when you buy them.
Jim, but how difficult is to wait until the right moment to buy?
You can't beat it.
I never tried to get at the absolute bottom, and I
Don't
never
get
tried to sell at the
bottom,
absolute top.
and you don't get out.
No, you don't need bottom. All you need is to go down as much as it wants to go down, and it has to stop going down. Stop before going higher. It has to stop going down. So
Well, don't tell the shareholders of Forever 21 about that. They went all the way into bankruptcy court. And that's the other thing is there are certain sectors I just stay away from completely.
Yeah.
Certain I like energy, I like tech. I do not like retail at all. Okay, and Macy's is closing like 340 stores. It's
Isn't it
not
something?
good. JC
It's
Penney's
hard to
been a dog.
imagine, but it's
JC Penney's been a dog that's never won a race. I mean, if you go to retail and you go to the restaurant industry, like Bloomin', okay, they own Outback. And they're right in my hometown of Tampa. I pass by their office all the time. But I think I'm a blooming idiot if I ever buy into the restaurant industry. I'm just not. It just ain't going to happen. And then you don't know what happened to Hooters. Hooters went private, and it looks like now they're going bust. The restaurant industry and retail industry is tough. All the people I know that have made it went bankrupt. Okay, it's just like it's eventually it just eats you alive.
I feel very, very much for those people because they employ a lot of people, and it's such a hard business.
Yeah. Did you see what the margins are in like silicon chips? I mean, they're like 40-50%. They're working with some hefty margins. Okay, if they keep those margin up, that's the reason those PE ratios are off the sky.
Absolutely, Nick.
Yeah, but if you look at restaurants and grocery stores, the margins are like 1%.
Yeah, they're tiny. Yeah,
they're tiny. You know, and all they need is a shakedown, and they shake down. So those are industries that I just like check box. They don't have any of my boxes. I don't care what they're trading at, because when they trade at zero, I'm not going to look pretty good. And Forever 21 went forever under. But if you went through the graveyard, you're going to see a lot of more. The graveyard of corporations are in the retail industry, especially consumer goods, just get hammered. And the restaurant industry, it's a tough one. You know,
David Chancellor, who ran the Yale University Endowment Fund, which is the most successful on the planet, said it is most important to have an asset allocation, such as, let's say, 50-50, 60-40 also works, 55-45, 45-50. They all work so long as you have a lot of cash. Wall Street doesn't want you to have any cash because they don't make any money on the cash that you have. But if you own SPY, which really reflects the American economy as a whole, and when the market goes up and you have more SPY than you have cash, you take profits to reestablish your 50-50 asset allocation. When the market goes down and you have more cash than you have a security SPY, you take the cash to buy bargains. You are constantly taking profits and buying bargains in the strongest economy that history has ever seen. Now,
I disagree with that, but sometimes you're right. But sometimes it could be very painful when you're buying bargains, and next day there are even bigger bargains. whatever you bought today,
you gotta wait for it to stop going down.
But Milan's theory is correct of having what they call cash reserves. I mean, I do that all the time, and he's also correct, unfortunately, that if you're going with a professional money manager, what's a cash reserve? Because they don't make any money unless the assets are under management. So if you're going to be an individual investor, you do have a little advantage that you can create.
Right.
I agree.
You're right about what you say, Sasha, as applied to individual stocks.
No, not necessarily.
The American economy, I've mentioned constantly that empires have a 100% failure rate. But the failure of the American empire is nowhere in sight yet.
Milan, I'm not talking about failure of American economy, not at all. What I'm saying is that the downturn could be so severe that if you're buying stock, averaging down, or for any other considerations, and stock keep going down, it could create a lot of pain, and even if you have a lot of cash reserves, you don't know where to employ, because there could be a move on the way up, And then look at what happened yesterday and the day before yesterday. Market went up. It was a healthy so-called retracement, but now it seems to me that it was more a sucker's rally. We'll see what's happened tomorrow. We don't know.
We're not.
What you're talking about, Sasha, absolutely applies and is true to individual stocks. And you pay a lot of attention to individual stocks, which we advise against. Don't buy individual stocks. Buy all of them by having an exchange-traded fund which tracks the S&P 500. That will come back.
Since
sure.
2020, we've had record corporate earnings reported. The stock market has soared. Companies have reported that the workers' wages have gone up, unemployment has gone down. So where is this recession that constantly has been told, we've been told has been coming? It's coming. Well, now the thing that we have no control over is what is Trump going to do to the economy? What companies is he going to hurt with his
all of them
tariffs and
about that Americans will be inflicted pain. That's his words.
I believe that's true, and I don't think Musk cares either. Musk thinks people's pain is just part of the cost of doing business. So there's no humanity going on here. What there is cold calculation about what's going to pay off in terms of what they value rather than what the average American values. The average American values certain things like a good community, safe schools, these types of things, but they don't. Their calculations are about something else entirely. And their calculations will inflict pain on the American consumer, and it will hit the stock market. When, I can't predict.
But Jim, the problem with the average American, and let's just go take a look at these demographics. The average American, and I'm talking about 50% of Americans, have a total of 2.8% of the assets, down from 3.5%. Okay, in other words, the average American isn't going to watch this show because they're busted. Now let's go look at the top 1%. The top 1% have 31%.
You're preaching to the choir, Nick. Income
inequality. I love that number. And then the top 10% own 90% of all the
Peter Thiels and the Elon Musks, people who don't believe in democracy.
Well, they don't understand what the average American goes through. But unfortunately, it makes it really difficult to be in business when especially if you're in financial services, when half the people that you run into can't afford anything, because they're living from paycheck to paycheck. They have no savings, and frankly, the average American is busted.
And look at the rent out here, Nick, where I live in Silicon Valley. I don't know how people get started.
I don't know either.
I had to live paycheck to paycheck. I had to sweat rent, but rent was not what it is out here now.
Yeah,
not even a fraction of it.
No, you live in the valley of the impossible dream. I mean, it's really hard. But even in Barcelona, where I live, the prices of houses are very high relative Barcelona, Maine, relative to the countryside. So if you want to live cheap in Spain, don't go to Barcelona or Madrid. You go to all these little towns and you can pick up real estate for next to nothing, and that's kind of the way it is. And so when you're looking at San Francisco or New York, those are two places. I figure if you make $500,000 to $1.5 million a year, you can live comfortable in those cities. But don't go to San Francisco and $1 million if you're making less than $500,000 a year. It's stupid.
The average American cannot write a check for $400.
I know that. I read those demographics.
You'll appreciate this.
That's horrible.
Grandmaster Joel Benjamin is coming out for a tournament. He's going to stay in San Francisco and give an exhibition at the Mechanics Institute.
Right.
And so he needed a hotel room.
Yes.
And it's like I got him one at the Sheraton Palace, which is right across the street from Market from the Mechanics. Yeah. And the hotel tax was over $200.
The hotel tax.
Hotel tax, not the price of the room.
Not the hotel. The hotel tax.
The hotel tax.
Oh, sweet. Yeah. Last time I was in.
It's impossible in some ways.
I was in San Francisco a couple of years ago, but I stayed at the airport. I don't know what it cost, but it was the Marriott. Wasn't that?
Well, that's the way to go. Yeah.
It wasn't that expensive, but usually if you're traveling, you want to go to cheap places and nice, stay at the airport hotels. For whatever reason,
my wife and I, when we go to New York, we stay downtown and we pay through the nose.
You stayed where?
we go downtown Manhattan near
Where
the
in
theater,
Manhattan? Because I usually go there a couple times a year. I'm going to be there a couple times this year. Where in Manhattan?
and you'll pay through the nose, but it's
Okay,
part of the
I'll tell you a place that sometimes is a bargain. You go to the Warwick in the Upper East Side. Check that out. When they go on sale, it's a great place. Here's where you don't want to stay. And it's really swanky. You don't want to stay at the Carlisle on the Upper East Side.
Yeah.
They will suck every dollar.
Yeah.
They're definitely well managed if they can get what they get. I mean, it's like $1,200, $1,500.
Hotels are not making money in spite of the high fees they charge. They're not making money. Interestingly, the people who make that shower curtain bar, in which the shower curtain slides back and forth, they are making money.
They're planned obsolescence. They don't. They
So since I have money keep pouring in, Sasha, what should I do with it? I've been putting money in the stock market slowly every day, and I just go looking for deals. And every time I go, I'm having a trouble.
Nick is having a first world problem.
I'm having a first world problem. In other words, I got to place money all the time. I'm going, okay, what am I going to do with it?
Right.
Like
I can't carry cash in Spain because in Spain the interest rate here is 0. I got a lot of money sitting at 0%. I'm serious. Just going. I asked the banker, can't we get any money on it? No, there's nothing. You have it in savings, and no instruments here give you anything at all.
Wow.
I'm serious. Welcome to the EU. Okay, so
a reliable way to make money is to see what the insiders are doing. When the insiders are buying, we should.
Oh yeah, insiders. Yes.
No, but you are getting outdated information.
Yeah, that's I'm always behind the insiders.
Files, forms, and you get the information.
I'll rephrase my question, Counselor. Do any of you guys have inside information under 10b-5 that would throw us all in jail, but would give me a tremendous advantage in terms of purchasing? Like if you knew that WBA was going to be bought out at 11:45, did you see the jump in that stock that day? I mean, it went off like a rocket, like 20%.
I can only tell you what Martha Stewart told me.
That's what I'm saying. Yeah. If you guys got any inside information, please pass it along. But please don't put it in that friends thing where Peter
encrypted. Yes. Like our defense.
And he broadcast to all his friends, including the SEC.
And Nick, one idea what I could suggest is to buy a company like Pfizer, for example. It's paying over 6% dividends. So think that you're just parking your money, collecting 6%, slightly more than 6% dividends. It's cost $25 some dollars a share, and even if it will go a little bit higher, say to $30 a share, and paying dividends, I think you should do okay. Also, you can sell covered calls as well if you want. But it's not necessary because you're buying at the lowest point in years.
Yeah, I sold Pfizer at 40 a couple of years ago.
So right now it's beaten up, but I think very unlikely. Even if it will go slightly lower, maybe to $23, maybe. But right now, probably I'd probably buy myself too, just to go through this crazy market gyrations. I'm very disappointed with action today because it seems to me that on Monday and even yesterday it was trying to get from oversold position, and today's message not so fast. Everybody is back in line, and the problem is that, let's see, the market went down today quite considerably. It will probably return to Monday's level, but it may take a couple of months to get there. Mm-hmm. Whatever damage has been done today may take a couple of months to recover, maybe faster.
Yeah,
I hope.
And I agree with what Milan's doing. It's buying the S&P as a whole, and you'd probably be better off. But it's just not any fun for me.
Yeah,
to me, there's no joy to throw everything or a lot into Pfizer and take a roll on Pfizer. I would do.
That's the thing. It's immensely gratifying when you
through
you're thinking about the complexity of the issues, and you come to a decision, and it plays out, and it's true. It's
Right.
very gratifying, and it's like solving a puzzle. And
Yeah, it's
for
like a
chess
chess
players, solving a puzzle is what it's all about.
Right.
There's a problem, and you solve it. And other people, there are thousands of other people trying to do the same thing, but you're the one who solved it, or you're one of a small percentage of people that solved it. So this is
a lot of the chess players are good at trading.
Absolutely.
Weinstein, Bose Weinstein, and Patrick Wolf, and they're all a lot of good traders.
Cambridge.
Even the guy that did the trading for Chuck Royce. You're probably not familiar with him. He runs the Royce Funds, Quest for Value. He was actually a client of mine. This is years ago, and I can't tell you this guy was making tons of money. Okay, but the guy who was running his ship was a bloody chess player, was doing all the trades. Chuck just owned the company. Chuck and his partner, which you don't know about, were making tons of money. This is back in the early 1990s. Mm-hmm. But there's some chess players like this. They plug a chess player into their wheel to do all the trading, and he was the guy who was making. Unfortunately, he died. And then there's been memorial chess tournaments for him ever since in New York City. But a lot of the chess players are really good at trading, and I figured out why. It's basically Jim, it's pattern recognition.
Yeah, absolutely.
And they don't teach you it in school. At the MBA classes I went to, I took all finance courses. You know what you learn? Nothing. Okay, it's just if they had a guy who was good at it, they wouldn't be teaching in an MBA program. I mean, seriously, So
you don't teach
on your own. I mean, it just is what it is.
International master Brian Hartman plays in our tournament, and Brian did not finish grade 9 last year.
But he did investing, right, Milan?
He sold his company for $20 million.
Well, that's good. He made a couple bucks.
He made a couple bucks.
Let's add up.
Didn't finish grade 9. Yeah.
Really?
Now, you're talking about charting somewhere earlier, Sasha. Do you rely on charting?
Yes, I do.
You know that economists don't think highly of charting compared to fundamental analysis. Economists don't respect
fundamental. Actually, I don't care much about fundamental analysis. If you really need it, you can use that Google or Yahoo Finance, and you will see everything what you need to know. Now,
he's doing the pattern recognition we're talking about.
But Sasha and Milan, don't you want as much information as you can before you make a decision? In other words, including if you could get inside information. I mean, information is the key to winning in the market.
Everything is in charts, because the charts are built on behavior of millions of investors. And because when you see certain patterns, it's not that somebody invented it and you believe in somebody just presented to you. No, the chart is based on the millions of investors' decisions, and therefore it's always right. You cannot argue with the chart, because this is the fundamental. This is a fundamental analysis, because so many investors believe that the market is oversold and therefore it will go higher. And the chart shows it, because let's see, if you take any security and you create a channel and you see that, okay, here is the support level and here is the resistance level. And if it's in the middle, that's when you don't trade, because there is you don't know whether it will go higher or lower. Now, it's well known back to the channel, and you don't buy it yet. You just see if it will break through the channel, through support, and it will go much lower. Maybe then you'll buy. Even that's not, I'm not so sure about that. But that's so you have to.
You've been saying when it hits a record high, that's when you buy. I've heard you say that a couple of times.
Yeah, I've read the Dreyfus Fund. The only thing what he didn't say in the book, that he was doing that when it was fresh, all new high. If it's fresh. Now, if it was already there, went all the way down and back went to that level, but it's not fresh high, then well, you can still buy it or you can sell it. You do whatever. Milan, question to you. Let's see on a day like Monday when S&P went up really well. So according to what you are telling us, you would sell some of your S&P holdings,
Take profits, yeah.
generating cash. So now when the market is going down, so you will use that cash to buy back S&P, right?
At bargain prices.
Milan, but if tomorrow market will continue to go lower, then this prices what are being paid today, they're not bargain at all. It actually there could be exorbitant prices what you'll pay. Let's imagine if the S&P will go down today, what 15% maybe? No, not 15%. Say 3% maybe, and tomorrow it will continue down and lose another 4%. So whatever money you will invest tomorrow morning, you will lose about 4% from this fresh money. And then comes Friday, you know what will happen on Friday? It will tank another 3-4%.
Well, the main thing, we've had this discussion before. The main thing is to be disciplined, to have what you do and stick to it, not be emotional and that sort of thing. And, I'm a contrarian by nature. So if everybody is high on something, I tend to be low on it. And if everybody is low on something, I'm interested. And, I sold right before the dot-com bubble burst in the late 90s. And the reason I did is I was at lunch and I overheard this Stanford student talking to his date, and he was talking about his launch. He was going to launch a dot-com company. And I like, in the old days, it was like when your cab driver used to talk about his portfolio, that's when you sold. And so this was the time everybody's launching a dot-com. It's too much of a bubble. I got out. And it was the smartest thing. My wife still thinks I'm a genius for doing it. And, she's had 30 years of corrective behavior, but it's like the smartest thing I've ever done in investing.
But also in Milan, I'm assuming you're doing this in like your IRA, which is what you have in the US or something like that. Because one problem I have with doing repositioning, sometimes I do really well and I have a big built-in capital gains. I don't want to sell it. It produces a good dividends, a good stock. And the minute I sell it, I'm turning around and contributing to my largest expense is taxes.
Right.
If you want to know, well, what do you spend your money on? I spend my money on taxes. So
you want to hold it for at least a year, so the capital gains and it's not.
Warren Buffett said that in the 60 years of investing that he's been involved in, he has never seen a good deal abandoned because of the tax consequences. If you're going to make money, you're going to pay taxes. You can't get around from that. So you just hope
I started out investing hoping to have a tax problem.
Exactly.
I didn't have a tax
problem.
Yeah,
I guess if you're doing a tax sheltered investment like an IRA, I can see that's not a problem. But if you're doing it, you're going to have to take into account the loss you're going to get hit with the tax liability on the sale.
Yeah, that's why you have to take it into account. But that's all you do is you got to take it into account. I'm going to lose this much for taxes.
Yeah, right. Yeah,
it's still a good chunk of change left to me.
I didn't answer Sasha's question adequately about what happens if the market keeps on going lower. Let's say you have a 50-50 asset allocation. Here's what works. The market drops 10%. You take a third of your cash to buy it. It drops another 10%. You fully invest in the market, fully invest. And if it drops another 10%, you borrow.
Whoa.
Yeah. And if you go yet another 10%, then what you do? Here goes your furniture, Tesla.
Your furniture, your house.
and I go back to work.
Well, Nick, in Barcelona right now, you can't get interest on your account.
No.
What do they charge you for a loan?
They charge like 2% to borrow money here. So if you want to borrow money, it's 2 points. And it's a great place if you want to borrow money at a very low interest rate. So yeah, it's like 2%. It's just a different world here when it comes to interest rate. 0% in the bank, 2% if you want to borrow it.
Amazing.
The interest rates have come down in the last little while. lower interest rates are not good for savers, but they're great for people who want to buy a house.
Yeah.
Yeah. The Fed is
Oh,
slow.
yeah, but the people here can't afford houses. The average salary here for a person in Spain is like 28,000 a year,
Yeah.
something like that. It's
Yeah,
really,
it's all over Europe. In Europe, very few people own houses. In Germany, in Switzerland, in Austria, mostly people live in apartments. They're renting apartments.
right.
They don't live in the houses.
You know,
Yeah.
what you say is absolutely correct. And let's just look at it from another perspective. The average Swiss is wealthier than the average North American. The average Swiss earns more money than the average North American. The average Swiss rents, does not own. Is that something for us to be looking at?
Interesting.
Only if you want to pay rent. I just don't like paying. I don't like dealing with landlords. So I just keep buying.
Yeah.
So I'm going to get a place here. I'm going to get another place in Scotland, another place in Washington, D.C. Only because I just hate paying rent and hate dealing with landlords. It's a personal thing. Whether it has anything to do with good business sense or not, I don't know. You know, it just and I don't like not having places I can go to. So it's me.
Well,
Yeah.
each individual is unique. My wife and I like to stay at different places, at different hotels anytime we travel. I
do that.
I always spend a lot of time traveling.
I do that too. And it was really disgusting. In the 90s, I owned 4 homes. I had a big home in Boca, another one in Boca, another one in Fort Myers, another one in Greenwich. And so what did I do? I spent my summers in Scotland. And I started thinking how stupid that was financially. I'm going, wait a minute, I got 4 homes and I'm vacationing in Scotland.
Yeah.
So I had to read that book, The Millionaire Next Door, again, saying, look, you can't continue to be here.
Ludwig van der Rohe, famous architect, said, less is more. The less you own, the more freedom you have. Less is more for everything except money. With money, more is more.
Yeah, that's true. You know, the thing is, it's my younger, more halcyon days, I just did things like that. So I'm just going to do it again now that I'm older. I never learn. You know?
Well, real estate's always been a good investment. So
well, if you hit the run, you know, the thing is, we had a big run up. You know, and I was heavy in real estate during the run up.
that's
Okay,
true.
but the people
Like again,
that
it's
want
timing. Timing is everything. But
time is everything. But if you weren't, you got screwed. You know, because you could sit there for a long time and the real estate goes nowhere.
yeah,
You know, but if you hit the run up, you did well, and good. You know, it's almost like good for you. And
that's
you
the
can
thing.
make position everywhere.
In Silicon Valley, you know, buying in the 80s, you know, was the only way to do it because then you could trade up.
Yeah, sure.
And but how do you get started now? Like you buying
You
in the
can't.
80s was possible.
This is how you
Buying
get
in
started.
the 2020s, you know, I can't imagine ever having accumulated enough money.
Yeah, I was looking at properties in Belvedere and Tiburon. I was going, who can afford this place?
You were asking James, how do you get started now? Here's how you get started. You don't own houses. You own real estate investment trusts.
I don't.
Which,
I never
which you
felt
buy
comfortable.
for very little money and liquidate instantly. The trouble with real estate is lacks liquidity, and transaction costs are so enormous with real estate. So,
Right. That's why I always avoided them. But it is another place to get income. Yeah.
REITs.
Well, before we finish our program today, I would like to mention, for me, another place to get income is selling covered calls.
Mhm.
Yeah.
In a market like what's happening today, the covered calls that I sold Monday and yesterday, they not that I'm making money as a result of it, I'm losing much less money as a result of it, because if you see red on stocks that you have, and everywhere is green on your covered calls that you sold. So at the end of the day, and I'm selling right now in this market, I'm selling short duration. Let's see, all my covered calls expiring this Friday. So all the way, like yesterday, it was another picture. All my stocks were green, all my covered calls were red, and I regretted so much. Why did I do it? What my greediness is. That's why. And today, I'm happy that I did it because it's definitely helped me.
No, it's definitely modern investing, Sasha, and I
That's
always
all
been
about
admiring how you explain it and do it.
I'm trying my best.
Yeah.
Yes, Milan, you wanted to add something?
Yeah, the best way to make money is to sell puts and calls and own nothing but SPY. And let's say you sell covered calls on SPY. When you're assigned, you're in cash, which then allows you to sell cash covered puts. And you keep doing that and taking in the premium income until you're assigned, then you're back into SPY. So between those two, either you have 100% cash or 100% SPY. You constantly go between one and the other, and that has returned an average of 18% for nearly 200 years. Hard to beat that. Yeah.
Well, 200 years, nobody of us was alive, I believe, so we didn't know. But anyway, I'd like to thank you very much for today's program, and have a great, successful week. We'll see you next Wednesday, same place, same time. Bye-bye, everybody. Thanks a lot.